Good evening, all.
What is happening? Welcome to Tuesday. Your friends with you once again, looking at the markets. Geez, I hope you've been playing along with us at home over the last couple of weeks, because it has been on fire. The calls that we have been sharing in these live sessions in Discord, in the newly created Facebook group that we activated last week. That's been a lot of fun, creating new units and some modules and all the engagement going on in there. Really, really cool to see people in there. Thank you so much for the quite a number of you that have already joined us. You can search for Trade Hacker by Unity Trading Group on Facebook if you want to come and join us there. Our complete Binance series has been in there. We're creating some units now there too. We're going to have little quizzes and fun little things going on in there. In the next week, we'll also be running an exclusive competition for those only inside the Facebook group as well. So get your butt over there, Trade Hacker by Unity Trading Group. It's a private group. Lots of really good stuff coming in the next couple of weeks for that. But in the meantime, I hope everyone, particularly in our home state of Victoria, is doing well. Wherever you are watching in the world, hope you're staying safe and well as well. So let's get right into this. Ads, don't want to say it, but we seem to say this every week, and we don't say this to brag or to to pull our own dicks, but this was a pretty predictable move. Yeah, 11.2 was the suspected top for this move. We spoke about how we were looking from that move back in early September, dump it from the highs there at 11.4, slam it back down towards that demand at that 10K zone, accumulate a little bit there. We shake out the late buys, have those little mini capitulations that we see. The big guys accumulate, run it back up to that 11.2, sucker in the FOMO buys, and then dump it once again. And here we are back now at this lower quality demand, but at this demand that we spoke about last week, and the demand that we spoke about early this morning as well inside the Facebook group. We did a post where we said that 10.5 was really going to be the struggle for BTC to get up. If we were to break above that 10.5 level, you can see that MA cluster and really that 38 resistance at that 10.687 level, where we didn't really expect 10.5 to pose much of a threat in terms of getting past it. We were looking for that demand. We hit it, and kind of here we are again, Ads.
Yeah, absolutely. I just want to circle back to what we were discussing on Thursday night and Friday morning,
Yes.
where we were really putting an emphasis on this 11.2. Like, yeah. I know some of the Facebook posts and some of the Discord stuff that we've been posting was revolved around the 50. But I did mention in this idea, the Fibonacci at play idea, which I did post in Discord also, is that it wouldn't surprise me if we move towards that supply zone, and I'd accommodate for this situation moving forward. And of course, here we are. We did get up to that level of 11.2, or that supply. We did front run it a little bit, admittedly. Well, I'll take that on the chin. But
totally,
we did get there, and then we pushed down underneath the 50, which is what we spoke about on Monday, I believe, or yesterday. Where I was go on.
Oh, sorry, man. I didn't mean to interrupt you. I was saying, yes, we were front runner that 11.2 zone that we were suspecting. But again, more often than not, when we hit a high quality supply like that, we're looking for signs of reversal confirmations anyway. So it's not like we just hit supply and then we bounce straight into it. So I got in at 11, I think it was like 11.140. I think I ended up hitting it because we had that bullish run towards it, and then we rejected pretty quickly from there. I guess it's not unusual to see it front run, but admittedly, I was expecting maybe even like just a little pop above that 11.2 to sucker in those late little buys before we came down hard. But once we rejected from that level and had those preceding bearish candles, it was pretty obvious that this range had been established that we had spoke about between really that 10.5 kind of level and 11.2 that we spoke about, and it was lights out after that. But if we also put on Trend Breaker, one of our custom indicators as well, we said this the other day. We were saying, hey, Trend Breaker's giving us this bearish signal, and Unicon was very shortly thereafter going to give us a secondary confirmation if we bang that on there too, Ads, of that EMA cross that we were suspecting when we hit that 10.9 area. So we had Trend Breaker, we had this bearish cloud formation, we had the down confirmation. The larger lighter red label that you see there is what's called our super trend exit from our Unicon indicator. So we had a lot of things there screaming at us. We had that 50 resistance, we had Trend Breaker, we had super trend exit, and we had Unicon all saying to us this was a point that we really needed to pay attention to. And even back up towards that 11.2 zone, Steamroller had just licked into that oversold condition. So while that wasn't a super strong confirmation that we had reversed from that point there, once other things come into play and all of our indicators start saying that you need to pay attention to that level, it was game on for the shorts.
Absolutely, it was. And what a short it has been since we broke through that trend line. So I drew that trend line off the line chart, just moving up there from that level of demand on the 9th of September to give me a decent level and what we should be looking for. And look, as soon as we got rejected on that 50, like we did discuss on Monday morning, like I said, we need to look out for the 50 level now, as we have broken underneath it. Once we did retest that and started becoming bearish, or got that bearish close after being rejected, it was nail in the coffin after we started to move past it. This level here, it is a low, like Ty did mention earlier, it is low quality demand zone. So it is in the middle of a major move. Yes, it is a small pivot. Obviously, we've got that sort of pivot action there. That's why we have stopped here. That's why it stopped BTC in its tracks for the moment. And obviously, we've got our 23 Fibonacci that runs across, looking at that liquidity just to the left. So that shows you why we've got these preceding candles and we haven't moved straight through it. But the higher quality level is going to be back down at about 10. And as you know, if you are using supply and demand, you can only bend a stick so far. So we have eaten a lot of these buyers, a lot of this liquidity just down here now. We have smashed through it. And this latest wick on the 9th of September has made sure we have. So if we do get back down here to 10, I suspect that we might see that gap filled on the higher time frames.
Yeah, I think if we're coming to a point where the gap is in play, I think it certainly is. It's going to be if we can't hold this low quality demand zone that Adj just spoke of. So this is a pretty important point, I think, for BTC in terms of the more extended range that we have spoken about in the past, from that 9-8 demand zone where we licked down for that sort of that double, triple bottomish sort of crazy wick down at that zero fib level, right up towards that 61 and then back again. So we're still kind of in this range, and hence the reason why we don't get too excited about breakouts or bullish continuations until we break those significant zones. Right now, we're just playing the range. And as I said I don't know what it was, Tuesday or Thursday or something like that, for myself, taking far less trades, but far more quality trades and a little bit longer term swing holds than what I typically would, because of my lifestyle at the moment. I just don't have the time to be in front of the screens. And it's alleviated a lot of stress, and it's actually improved the ROI on my trades and what I was doing, trying to be in front of the screens more often than not. So this has been a pleasure to trade. Not every trade's gone my way. Just because we say, hey, we called this, we called that, doesn't mean that we're always winning. I certainly have some losers when I probably trade outside of my trade plan more so. The trade journal, which you can find inside in our indicators channel on our website, has been invaluable for me. I've really been a stickler for trading. If you want to bring that up, Ads, as well, and we'll do a video on that in the next week or so. Our trade journal there on the right hand side, for me mentally, has really been a godsend, in the sense that I've really been labeling my trades, looking at where my mistakes have been with those pre-configured, those predefined tabs there that you can just bang it straight into the journal. For myself, was trying to take too many trades at once when I had a little bit of spare time. I think I was kind of trading just for the sake of trading, because I was taking less trades but feeling like I needed to be in more. But having that journal there and reading that every day has really helped me to sort of snap me back into what's good. And I'll just say very, very quickly as well, for myself, because I've been so busy with personal things, admittedly, I feel like my mind's been really scattered the last week and a half, and I think I've probably been holding a little bit more stress than what I normally would. And I've spoken in the past, and this is non-trading related, by the way, but if you're feeling overwhelmed, or if you're feeling cluttered with life and trades and everything, I highly encourage you, and this is something that I omitted from my daily routine, was meditating. So you can look at something called HoloSync, HOLOSYNC, by a guy called Bill Harris. Really great meditation app. Or another one called Calm. And if you haven't tried meditation, give that a go, because I think it really mentally reset me. And instantly, when I'd finished a 20-minute session, I felt like a different person. So non-trading related, but if you're feeling a little bit sort of mind cluttered and everything's a little bit fucked up in terms of your mental conscious state, then I would highly advise you to give that a crack. All right, moving on. Let's get into FUSD, unless we've got anything else to say, Ads.
Just one more thing with BTC.
Yes.
While we're at this level of demand here, and we've wicked off it quite significantly now, it is being respected so far. So when we say that we might see this 10,000, and even further downwards in terms of price action, we're really referring to the high time frames macro scale of things. There's every reason, or there's no discounting the fact that we could move, more towards a relief rally for the moment to satisfy, steamroller CCI RSI before a move more towards the downside. Yes, the daily time frame is on its way down in terms of, steamroller giving us that sell signal, CCI and RSI, giving us a little flick, but ultimately in that sort of downwards momentum. So in the immediate term, like very like short term, I'm talking like couple of days, we might hang around this level here, or even move back towards that resistance or that 38.2 level before we see any further downwards movement. I could be completely wrong. We might just move down from here, but I would accommodate for that fact that these indicators are quite oversold at this point, especially on the 4-hour time frame, and we might need to cool down or calm down for a little while before we move, break significantly in either direction.
Well, put your MA fan on there, bro, and you'll see that the MA cluster lines up pretty well with that 38 level there as well. Considering that the MAs are dynamic, they're not fixed there in that position, particularly with your shorter MAs, which you probably would find more so on Unicon if you bang that on there real quick. And that 10 and 20 MA. Yeah. So there you go. So I think there are your two levels of resistance, in my opinion, if we do have this, which we're looking at steamroller is very much a potential. So that 10.5 will be significant there, and then above that being that 10.687 level that we highlighted this morning if we can't, if we do break through that 10.5.
Yeah. I think 10.5 will probably be, I think this level that we've rejected previously will be an area of interest for me, honestly.
It's a little bit psychological again now, isn't it? It seems to hold a little bit of relevance, and you can see where we've been rejected twice there in the past as well. Yeah.
So all I'm saying is just maybe accommodate for some relief for some of the indicators. Not even steamroller, just even RSI and CCI and even probably your MACD on this time frame, just to accommodate some relief, and then we can probably expect that daily macro move to move in our favour. We'll see. We'll have a look at this tomorrow morning and Thursday night.
All right, FUSD.
FUSD leading the pack. I did say this Monday morning. So it's really good. It's a really good pair to look for if you want to look for preemptive moves on BTC, because ETH does move, because it is a lower cap coin or a lower cap crypto. It is a little bit easier to move the price. So you can probably preempt some movements on BTC against the ETH-USD pair. But ETH-USD, if I draw in the relevant level of demand there, we can see, and I'm just going off this sort of pivot point there where we bounced off, and that would be a probably significant fib level if we draw it on the smaller time frames as well. But we are bouncing off this 341 area. We have moved through this level quite significantly with the wick, as we did see similarly on BTC as well. We are eating up some of this liquidity now, and I think 321.25 or the top of this demand that we were looking at last week, or when we were here, not last week, it would have been a few weeks ago now, when we were looking at 321.25 or that level of demand there that we were eyeing off 320 mark, 300, 320. I think that's going to be a level that we'll see again, to be honest, looking at the structure that we're seeing now. Honestly though, circling back to what I just mentioned on BTC, there might be, or there probably will be, some relief rallies to be had, especially on the USD pairs, because we are at this quite significant oversold level now that we can expect some relief. So if we even draw some of the Fibonacci, if we draw some of the short-term fibs in, if I just bang that in there quickly, from isolating this move on its own, we can probably see that we can have a look at the 38.2, and that lines up quite nicely with that liquidity just to the left-hand side there, where you've got those wicks, you got some closes, and especially these rejections here from the move between the 9th and the 5th of September. So that would probably be an area of interest for me at 356 for ETH in the very immediate term.
Yeah, totally agree with that. The major levels for myself and that have been for ETH for a little bit that have not changed really for me in a long time are 398.22, 354.01, and 332.90. Below that, 319.60, not to give you like the dollars and cents, but that sort of area, 319, 332, 354. So having that relief rally from this demand zone here seems likely. A bounce back up towards that 356 level, which would be the 38 fib level. We can see the kind of similar reaction that we've had in the past where we've dumped significantly. We've hit semi-significant. The one down towards 321 was much more significant, but this pivot that we have here at 335, I think will hold this time. If we don't break through that 331, I think we will have a relief rally from here up towards that 354, 356 level, and then potentially another rejection from there. Maybe as high as 363, but 354 is going to be significant for me.
Yeah, absolutely. 356 or that 38.2 looks, to me personally, like a better level to look for, because we do have the liquidity to the left on the 50 at 363 if you just look towards the left hand side, but there is even more liquidity sitting at that level, at that 356.38 level, and that would complete the narrative in the way of moving structure, or that moving market, where we've got we're looking for a continuing move, and that 38.2 is usually where we would look for that relief before a movement to the downside. And that really holds true with a lot of markets, and even on the bull side as well, where if, for example, if BTC or ETH is in a decent run or trend to the upside, we always look for that 38.2 retrace before a further move to the upside. So just continuing that story or that narrative before we move even closer towards that lower demand level.
Yeah, and if you do bang Trendbreaker on that, this is one of the pairs where Trendbreaker really, really, really shines, and you can kind of see that there to the left where we had this. Are you on the daily or the 4 hour?
No, the 4 hour. I can move it to the daily.
No, either is fine, but on the 4 hour in particular, we did have that nice short signal right from the top of that move at that demand zone there. Right at that it was about the 378 level from.
Yeah, it was about 380-ish.
Yeah,
380.
Yeah, and you can see how well that volume weighted moving average is respected as a level of support above it, and then a level of resistance when we're trending below it. And the blue indicates that we're having a strong trend change. So you can see where we hit that 61, bounced back up, rejected off that blue moving average in the center there of that 61 level on that overall downtrend line, and then headed back down. So Trendbreaker, a really nice little pair on this particular, a really nice indicator rather on this particular pair. So even not to get too convoluted, but if we put Unimoku on there as well, adds on the standard settings as well, we can see that even on the crypto settings too, you can see that you've got the double standard settings on there.
Hang on, I'll change it to the normal ones. There you go.
And you can see there and last week or the week before, I can't remember which one it was, that we went through and we spoke about our base and conversion lines, and we've got that conversion line resistance sitting right there at that 356 level as well. So even from an Ichimoku standpoint, we've got a bearish cloud formation at the moment, which tells us that we're in this bearish territory after breaking through that Kumo, a bounce back up and a rejection off that conversion line and 356. So one thing that's really important when we spoke to Crypto Says on the Trade Hacker podcast, which you can find on the website, he spoke about it, and I love this analogy, talking about building a narrative. And we're not so much building a narrative on timeframes, we're building a narrative with reliable and trusted trading techniques or indicators, being supply, demand, Fibonacci. It could be VPVR for you, it could be a whole bunch of different things, but Ichimoku, Fibonacci, and some of our MAs, along with Steamroller, are lining up, telling us that that's going to be a significant level of resistance, or at least a significant level to start paying attention to or layering in shorts if you're perhaps looking at that 50 fib rather than the 38.
Yeah, absolutely. Absolutely, it would be. It'd be a decent level to start even averaging in at the 38 and going up, layering in towards that 50. And I know myself, that would be the play that I would take.
That is certainly going to be the play that I'll be taking. All right, let's have a look at two more crypto things, and then we'll get into the reg market. Let's have a look at BTC dominance now, because we're having a look at that more often than not now.
BTC dominance.
Oof. How's that? What a bounce off that downtrend line, bro. That was mint.
Yeah. So the way I did that was again line chart, basically line it all up and draw it in. But we did have a nice bounce off that downtrend that I did highlight on one of the earlier videos. I think it was yesterday or even Friday. But we did have the bounce, and that level was going to be respected. Pending the move or the upward tick on our steamroller indicator towards that level of demand there. Supply. which I have adjusted since we looked at it. I did move it to this pivot point here, and we have moved through it now. We have eaten away a lot of that zone, so we're looking at looking towards the next one, towards the upside, which would be, if I had to draw it in, it's a little bit. I'd probably go that one there, to be honest. So that topwards pivot point there, we've got the rejection just to the right of it. So that would be the next level of interest in terms of a supply and demand, or a supply level for the BTC dominance chart. Yes, this needs to cool off. So it has formed a decent range there. If we get rid of this zone, we could pull back all the way back down to the 61 or 6124 level before moving up and retesting some of these resistances, or even that level of supply. So it will be an interesting move on the BTC dominance chart. If this does happen, those alts are going to be bleeding, man.
Yeah, I've stayed so far away from alts lately. It's unusual for me to not be trading alts this long. But what you said lines up really, really well. If you go to the daily chart, smack on our MA ribbon, which you get a part of with your premium or pro trade packs, lines up really, really well with what you've just said there with that 100 MA. Pretty much lining up with that supply up there. So that's kind of what I'm looking at from an MA standpoint. Yeah, our 50 MA, our more reactive MA, is starting to turn up a little bit, which could definitely align with what we're thinking for a potential relief rally from there. But that 62.52 level is really my next area of interest. The 60.04 and the 61.68 were these major sort of levels, or this range, if you will, even though we don't put a great deal of weight on this chart that we've said a number of times. But that would be where I'd be looking next.
Yeah, exactly right. A couple of things I wanted to point out. What was the next pair you wanted to look at, bro?
FBTC.
Oh, FBTC. We'll do that first then. FBTC. There it is. FBTC really telling that story with the BTC dominance chart. Let me tell you that, because it is starting to decline. Well, it has been declining for quite some time, while the dominance chart has been moving to the upside. And FBTC will probably make up a very decent chunk of that dominance chart as well, might I add. However, not a lot holding this up, to be honest with you. We've got some levels of support-ish. I would probably, if I had to do this, if I had to find some levels for this to be respected. Okay, so that's why we bounced off that level, like in smack bang in the middle of nowhere. You can pretty much see that you got the trend-based fib extension, so swing high, swing low, back to swing high, to give us our downtrend. Our one Fibonacci level, so 0.032, was an area of interest, always going to be an area of interest for ETH BTC. And that's the area that we've bounced off. So we are now, getting stuck on this 786 fib retracement, as you can see with some of the candles that preceded that large drop that happened over yesterday. And we are moving back down to the one. So look, the same sort of thing applies in this instance with ETH BTC. We're looking for some respected moves, and we're probably looking for a bit of a relief rally again. Even circling back to what we've seen on ETH USD and BTC USD, and more than likely we're probably going to get that same scenario here. And that 618, that golden 618 that we're all used to on the Fibonacci, we're using it in the opposite direction this time. And that's the level that's probably going to be respected, or give us that relief with some of the liquidity that's sitting on the left-hand side there, Ty.
Yeah, I totally agree with that. Steamroller, and what's the number one rule that we talk about? Never ignore steamrollers, and steamrollers definitely telling us that we're similarly, as you mentioned, to those USD pairs looking for a relief rally. But I think ultimately the level is going to be back down towards that 31 level where we bottomed beforehand. And potentially beyond that, but that's really the next level that I'm looking at myself, which is if we go to the daily chart, just very quickly, not to continue to harp on it, we go to the daily chart, throw on our MA fan.
Yeah.
MA fan lines up quite well with that. And if we also put on Unimoku on our standard settings, we get a little bit of confluence there with the bottom of the Kumo with our MA fan. If you just bang that on at the same time, bro.
Yeah.
Lovely. So there we go. So we've got a bearish Kumo twist. We've got the bottom of the Kumo holding up there as well, along with our MA2. So, yeah, short-term relief rally. I think mid-term, or looking from a daily perspective, that's probably the level that I'm going to continue to look at, which would mean more bad times ahead for a majority of the alt. So we might see a few little alt relief rallies. Myself, personally, I couldn't care less about trading alts at the moment. I'm just focusing on these two pairs, and that's kind of what I'm looking at.
Just on the topic of alts, there was one I wanted to have a quick squeeze at, and I wanted to really expand of what I posted in Discord. XTZ BTC, I think it was. Yep, that was the one. So when I bang these charts on Discord, and I know they look quite nice in terms of the risk to reward, the percentage gain, everything like that. This was the one that I was chatting to Dill last night with inside the Discord live. When I post these up, don't take this as gospel, obviously. Don't draw your own TA, draw your own conclusions. However, after looking at the BTC dominance chart, we know there's more upside for the BTC dominance chart, and we can probably expect alts like Tezos, Lend, Link, a lot of the big guys that we're all used to. There's nothing there stopping them from coming down even further. We know BTC can have a rational move, so can the dominance chart. The dominance chart can move irrespective of the BTC price. The BTC price doesn't have to move for the dominance to move. So you can have upside on the dominance chart without BTC even doing anything, and that will strip volume out of the alts. So just be mindful of that. And when I post these things here, it is obviously high risk. It's a counter trend trade, something that you need to draw your own conclusions with. But some good upside potential on a lot of these altcoins if we get the rallies that we want out of these things. And looking at some of these charts here, we're quite oversold on a lot of these. So these relief rallies could happen, but you need to be a little bit realistic is the word I'm looking for in terms of the moves that you're finding. So if you're trading, not so much this, just use this as an example, but if you're trading any of the altcoins, looking for these low buys, low bounces, then I would be using stop losses that are in the right spot. And if your trade starts to move in your favor, hopefully it does, then your stop needs to follow that price. Just in case that dominance chart decides to move upwards in not an ordinary fashion, because that's what crypto does. So if we decide to move up quite significantly on the dominance chart, it's going to ruin all these alt trades. So we just need to be mindful of that, Ty.
Yeah, totally agree. And what you've got there with Tezos is a really good example with a lesson in being patient.
Yeah, absolutely.
Let the trade come to you. You can set it up, put it in your trade journal, document it, set your alerts, whatever you need to do. But this is the fun part. This is waiting for the trade to come to you and setting things in. And when that buy hits, that was a very strategically well played and executed trade, perfectly to your trade strategy or however it is that you play. So this is the lion waiting in the wilderness to strike, the antelope or whatever it is, whatever sort of analogy you want to use. Really, really good lesson in patience. So I'm glad you brought that up.
Yeah, like in this instance, if you were looking at this chart, you would say, okay, I would leverage myself into this coin, knowing that Steamroller, CCI, RSI quite oversold, especially on a really high time frame chart as a daily on an altcoin. That's when you can find the most respected indicators, most respected TA, most respected price action. So that's why I did share a few of these into the Discord today. Go back and have a look inside the community charts channel. There's a few setups like this happening across different altcoins. But honestly, just be realistic about these outcomes. That's all.
Yeah, totally. And if that trade went to plan and I lost, I'd be, as counterintuitive as it sounds, I'd be quite satisfied in that loss because I followed my plan. It just didn't work out. So bang it in your journal and learn from the next one.
Exactly right.
Yeah. All right, moving on. Let's get into the reg markets. Of course, anything and everything that we share when it comes to Forex and regulated markets is not financial advice. If you do want to seek financial advice, you'd be best speaking to a financial advisor, not us. Do so at your own risk.
With the DXY, the dollar currency index, we've been following this on our Tuesdays and every single day during the week as well in our morning sessions. And this level that I've been harping about for so long that we will retest eventually has come. That day has come. I can finally say I can sleep at night, Ty. We are at the 93.8 level again, and we have been rejected just as harshly as we have been over the last 2-3 times that we have seen this level play out. So not a bad zone to look forward to on the DXY. Honestly, do I expect this to fall over? Yeah, I probably do, to be honest, with quite harsh rejection. So we've wicked in even less than some of the other times we've been here, and we have closed, or we are about to close in about 50 minutes time, quite significantly under this zone now, with some oversold and some exhaustion coming up on our level of on our steamroller level there. We do have a double top scenario on our CCI that gives us a bearish divergence, in accordance to these levels compared to that double top there. So it is bearish on the CCI in terms of the divergence. Not so much on the on the RSI, but it is there on the CCI. So what can I expect from here? I can probably expect something like this. So I'll get rid of that for the minute. Oops, wrong one. One there. Swing low, we'll go all the way to swing high. And we can see immediately that our 50 lines up quite nicely with that level of demand there. And more than likely over the next coming days to even 7 days to this time next week, even Thursday next week, we'll probably see the DXY start to decline. We know how the economic world is working at the moment. The only thing that could drive this higher, and this is the however part, the only thing that could drive this higher is more downside momentum on the indexes of the stock market. So you're looking at the SPX 500, the All Ordinaries, everything like that. If they start to decline even further, if we change over to the All Ordinaries, that's the one I posted on TradingView yesterday, I believe, and we were highlighting in that post that this level at 5,700 or 5,750 points for the All Ordinaries would be an interesting level to look for, and especially on the XPX 500, it has been declining for quite some time now. So if these SPX start to strip down in terms of value, then that could push the dollar or the DXY higher. So that's the only outcome that I see for this DXY to continue through this level of supply. However, we are at a critical level. We have been rejected here in terms of price structure and price action multiple times now. So I would expect some form of relief even towards this 23.6 where we do see these tops to the left-hand side. Before making any sort of major decision on the regulated markets. So that's what I would, that's what I gather from this price action with the DXY for now. So it's going to be interesting over the next couple of days. We'll revisit this on Thursday night. Even tomorrow morning, I'll have another look at it to discuss how the volume over the course of this evening goes. But it's going to be interesting to see if we do get back down to this 92.81 before making any sort of large macro decision on direction. Moving on, however, we'll look at gold. Gold spot has been moving in the direction that a lot of the guys in the Discord, in the Forex channel, if you're watching, JB, you've been killing it, man. It's been really nice to see you in there, Matt.
Damn, that channel is on fire.
You guys have been really, really, really
killing
good in
it.
there. And I know you guys were looking for this gold move to play out to the downside, which is really nice to see. In terms of what we're seeing now for gold, it is, in that downwards direction. However, this is what you have to be paying attention to if you're looking for the DXY to either be respected or not in terms of that supply we were just talking about, because you're looking at gold now at the quite oversold level with the level of exhaustion that we're seeing on Steamroller. We are seeing a pivot up on the CCI, and also the RSI is a little bit lagging behind, but it is moving towards the upside now, more towards that 50 mid or median range there for gold. So you could have more upside potential for gold, even back up to this this pivot where we started this decline, or even back up to, this Fibonacci, this 1920 level might be an interesting level to look for. If this pulls back up in terms of what we're seeing, in accordance to steamroller, this will pull the DXY down. So there's a little bit of give and take there with a lot of these charts that we're seeing, and you've just got to be mindful of all that coming into play. I know the DXY is at a critical level, but irrationality plays wonderful things. It happens in crypto, and it can certainly happen in Forex. We've seen it multiple times now, and the guys that have been trading in the Forex channel know exactly what I mean by that. So just be a little bit mindful of that. With silver, however, silver has been leading the way. It's more the Ethereum of the FX world, where you can sort of preemptively see what we're looking for, what we're getting at. We are looking at a level of support here. If we're looking at this 61, this negative 61 extension there, and if I draw that in accordance to a lot of the liquidity that we see to the left-hand side, we can have this relief rally back even up to this 00 fibs, this 25.84 for silver as well. So that's just keep in mind that these coins, but this asset class for the metals especially, has had a decent tumble, and it needs a bit of relief. So that will push and pull the DXY in either direction. And if we have the push and pull direction, we have the push and pull scenario happening on the DXY, where we're seeing gold and silver drag the DXY back down. You can see a lot of the currencies like Euro and AUD push back up. So just be mindful of everything around you when you're trading in this market. But yeah, that really concludes the scan for the evening. I don't think there's anything else we want to look at, Ty.
I think that sums it up, my brother. So thank you very much, everyone, for joining us. For anything that you do want to trade with, or anything that you've seen us using tonight, you can go over to the website and jump into the indicators channel there and grab the indicator packs, the monthly packs. You'll see we've got the Ichimoku for beginners video there highlighted on the main page in the premium and pro trade packs. And then, of course, come over and join us inside that Facebook group too, Trade Hacker by Unity Trading Group. It's only been open for a few days, but amazing to see all the people coming over there and the content that we're sharing in there. And already coming from a number of you guys has been really, really great. So thank you so much for joining us. Trade safe, be safe, and we'll see you on Thursday night.
I'll see you tomorrow morning.
Bye.